Hey everyone, welcome back to Corporate Decoder. Today we're diving into Mawson Infrastructure Group's latest annual report, and let me tell you, it's a bit of a roller coaster. We're going to decode their year, from Bitcoin mining to AI aspirations, and see if they're building a digital empire or just digging a deeper financial hole. First off, this is their official yearly report called a 10K, basically a company's homework assignment for investors. We'll break it down to see what's really going on beneath the surface. Let's cut straight to the numbers to see what happened in the year that just finished. Their digital colocation revenue, that's like renting space in their data centers for other companies to put their computers, jumped to about $38.5 million. That's a big increase compared to about 16's renting data center space is going well for them. Next up, energy management revenue also saw a rise, hitting about $7.6 million, again up from $5.4 million. In this, they make money by adjusting their energy use based on what the power grid needs, which is pretty clever. But here's where things get a little less shiny. Their digital assets mining revenue, that's their own Bitcoin mining, dropped significantly to about $12.6 million, down from almost $22 million the year before. That's almost half as much. The fall of Bitcoin mining revenues is a major factor impacting their profitability. Their overall revenue, when you put it all together, did increase to $59.3 million compared to $43.6 million. But the decline in the Bitcoin numbers is hard to ignore. Gross profit increased to $23 million. Operating expenses, however, didn't do so good and came to be $51.4 million. Selling, general and administrative aid costs dropped a little bit. But depreciation, which is the expense that recognizes that machines lose value with age, remains significant. After all the operation stuff is done, non-operating expense, meaning how they manage their money, investments and debts, turned out to be a negative $14.2 million, going down from positive $7.7 million. Ultimately, the company's net loss for the year was about $46.3 million, which, while significant, is still an improvement from a loss of $58.5 million in the prior year. So while they're still losing money, they're losing less of it. Now let's move into some of the less obvious but really important parts of this report. It turns out Mawson admits to some serious issues with their internal financial controls. There were material weaknesses, meaning big problems that could mess up their financial reporting. One big problem: inadequate segregation of duties means not enough checks and balances in their accounting. Think of it like one person doing all the jobs in a bank, bad idea. Also, there were problems with their IT controls and ensuring data from third parties is complete and accurate. In terms of cybersecurity, the company thinks they are doing fine, but in such an industry like Bitcoin that can be easily stolen, it can be devastating if this turns out to be wrong. Here's the big worry. Mawson says they need to raise a lot more capital to keep going, and there's no guarantee they'll be able to get it. If they can't, they might have to sell off assets, reorganize, or even go bankrupt. That would be really bad news for investors. There's also a risk of getting kicked off the Nasdaq Stock Exchange because their stock price and overall company value are too low. Getting delisted can make it harder to raise money and could make the stock price go down even more. Another risk they highlight is that other companies in the Bitcoin world might be forced to sell off their holdings, which could drive down Bitcoin prices and hurt Mawson's revenue. But of course, governments could step in and regulate digital assets even more, which could make it harder to mine, own, or use Bitcoin. This is an ongoing threat that hangs over the entire industry. Finally, climate change regulations could also add costs and create problems since Bitcoin mining uses a lot of energy. And as always, there's a risk that they won't be able to keep up with all the rules and regulations, which could lead to penalties or other problems. One final thing to mention is that because the accounting rules for Bitcoin are still new, Mawson's accounting methods might have to change in the future, which could require them to restate past financial results. They need to add new and more efficient mining equipment to keep up with competition. They also updated their executive leadership. Also, the company is engaged in material litigation with its lenders. The Bitcoin halving also puts uncertainty in the near term. Company may get delisted from Nasdaq. Company's expansion into AI may increase risks. The chief financial officer is responsible for risk management. Now, what's my take on Mawson? Well, it's a mixed bag. They're definitely growing in some areas like data center colocation, but their core Bitcoin mining business is facing some serious headwinds. They're still posting losses. The amount has decreased, but it's still bad. Their biggest challenge is their financial instability. They need to raise more money, and if they can't, things could get really ugly. On top of that, the ongoing legal battles and the risk of stricter regulations are major concerns. The business is in debt, is unprofitable, and is getting sued. Not a great look. However, their efforts to diversify into AI and HPC colocation could be a smart move if they can pull it off. Is Mawson building a digital empire? Right now, it looks more like they're trying to keep from sinking. Keep in mind, a diversified company is a company that's core business is not working. But hey, you never know what the future holds in the crazy world of crypto. Thanks for watching Corporate Decoder, where we looked at financial reports to try and understand a company's prospects in very simple terms. If you found this helpful, give us a like, subscribe, and let us know what company you'd like us to decode next.